Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the Monday, the 19th of September, Bull versus Bear webinar. Steve Miley on the call for trade day. Welcome, everyone. It's going to just let you know, guys, going to be a fairly abbreviated webinar and in here today. I appreciate some of you in the US are getting up early. It is a UK holiday today. It's the Queen's funeral today. I've just stepped out from mid-funeral to come and do the webinar. So just to give you a heads up, guys, it's going to be fairly abbreviated. I'm just going to do our usual run through though. We will cover all the macro geopolitical developments. We're going to do that weekly look back and the weekly look ahead. We'll also take a look at some current articles from the major newswires. Not too much to focus on from over the weekend and going into the day, however. And then just a very, very brief look at the charts to see where the kind of trigger levels just on the S&P and the Nasdaq are going to be going into the day. We'll just focus on those. So to kick off in here, dominant event, obviously from last week, was the hot US CPI number. No need to go through those numbers, but certainly above expectations. And with the market looking for peak inflation, or inflation's already peaked, that really raising the higher inflation rates, higher for longer maybe, that maybe we're not going to see a significant drop in inflation even if it has peaked, and then that's kept the tone very much for central banks to be more hawkish. The other kind of development last week was the EU, the European Commission, proposing a 140 billion euro package to deal with the surging energy prices in here. Various measures, including potential windfall taxes on company and corporates that deal in the energy sector. So that could may potentially alleviate some of the pressures that Europe and the UK are seeing from those higher energy prices, more so than you're seeing in the US. What happened in markets? Well, biggest down week for the S&P since the middle of June. European, Asian equity indices also significantly lower. US 10-year yields and yields across the board hitting close to June peaks on the 10-year yield. I've got some of the charts down here below, so you can go and take a look at it. Remember, you can download this, guys. It's in the members area, in with the technical analysis reports. So we're right up near the yield high here for the 10-year, and a big downward, a bearish outside weekly pattern for the S&P. German index here, the DAX, European indices also lower. US dollar rebounded, getting back up close to the highs, the recent multi-decade highs. The other big event was the pound, again hit its lowest level since versus the dollar since 1985. This is more to do with US dollar strength and pound weakness, but the pound is particularly weak compared to other currencies as well. Gold went lower to yet another new multi-year low, and creating a bigger topping pattern here for gold, looking very negative. Oil nudged lower, but was more in consolidation, and copper also consolidating at the moment. So those are kind of the market moves last week. What's of note this week? Well, I'm going to start with the data actually. So just a heads up, guys, is the Queen's funeral today. I've stepped away from that. That's ongoing at the moment. So all UK markets are closed. Actually, we've got the biggest shutdown I've seen in this country. I mean, nothing is open. I mean, nothing. Even like a normal public holidays, usually there's some stuff open, but I mean, nothing is open in here in the UK. So UK markets obviously closed as well. Shouldn't mean that you have a massive negative impact on liquidity globally, but nevertheless, just to give you the heads up on that. And then it's a fairly quiet week on the data front. Now, this is just data, not the central banks. Will come to the central bank shortly. The main data we're going to focus on is at the very end of the week on Friday. We get the flash PMI data on Friday from S&P Global. That's for all the major economies. So that is the main data point of the week. But throughout the week, it's super busy for central banks. And obviously the critical event is going to be Wednesday's Fed decision. So all eyes on the Fed, particularly after that really hot CPI number. But just as a note in here, we do get tomorrow, so actually overnight in here, going into tomorrow, we get the PBOC interest rate decision, People's Bank of China, and also RBA meeting minutes. Then we get the Fed on Wednesday. And then on Thursday, we get the Bank of Japan and the Bank of England as well. So it's a really super busy week for central banks. But the big focus is going to be on the Fed. Quick nod to the calendar today, say UK holiday in here, also Japanese holiday incidentally. So, markets are coming in today very, very quiet. Got some ECB speakers, no real data of note, say those RBA meeting minutes overnight. What else we got for you? Nothing really. We've got stocks are slightly lower. Stock futures, equities slightly lower in here. As I say, Fed, BOE, BOJ all coming up this week. Fairly slight quiet. Futures fall and rate hike worries. It was a weak close to the week last week. Although you did get we were down on the day, but on Friday, but we did get a pop higher into the close on Friday. But having giving up some of that, stock struggle, dollar still stays strong. So nothing we don't know. So we spoke about this. Europe races to prepare for energy crunch this winter. Lots of measures starting to be put into place as the weather starts to turn as we head into the winter. German economy to shrink all winter as gas taps are turned off. That's from the Bundesbank. That's the German central bank. So yeah, I mean, a big focus going into this week on European energy crisis, alongside obviously the central banks. Here you see European bourses are significantly lower, between 0.5% and 1% down in here today. Remember, UK markets are closed. And if we look at US futures in here, sorry, just pop this one open. So US futures in here, you can see as well. We were slightly lower in here on the close, even though we got a bounce on the close, lower on the closes on Friday, and down in here about 0.75% across the board going on the futures markets going into today. Quick nod to the Fed tool in here. This is increasingly higher, 80%. I really don't see much chance of this. Is a 100 basis point hike on Wednesday. I don't see much chance of that. But as we've looked at before, the peak in rates now much higher than it was only a couple of months ago. Looking for the peak in rates going into next year to be now at 425 to 450. So given that we're 225 to 250 at the moment, that's 200 basis points higher, 2 whole percentage points up. And then that peak going right the way through, if we go right out in here to July, and actually we can go further out, so 220, you see 425, 450. September next year, 425, 450. November next year, that's where the potential rate cut comes. Okay, so somewhere between maybe the September and November meetings, that's when the market started to price in potential for a cut, and by the end of next year, certainly pricing in maybe one cut. But yeah, so now given that we were looking at cuts previously around the May meeting, and then notable cuts after that, now we're looking for rates pretty much to be on hold right the way through most of next year into from over a year away. We're looking for the first cut over a year away now. Quick nod, and it will be quick. Apologies for the speedy webinar, but as I say, it's a UK holiday here today, and funeral ongoing. I'm going to go back and watch the rest of that funeral. If we go in here, S&P 500. So even though we got that rebound into the close back on Friday, the market's given that up, and we're making new lows in here this morning. So looking very vulnerable going into the open. There's not much support in here. We're now significantly down through this trend line support on the S&P. That's the distant memory now. You've already gone through some supports over here back from July, and there's nothing really of note, I would say, on the way down there. So nothing really to hold this up going into today on the S&P. You look at the 15-minute chart. The market's had that. That was the rebound back late on Friday. Since then, just erosion all morning. We have had a little pop higher in here over the last hour. For me, that's a sell opportunity going into today. Don't see any reason for buyers to come into the market at the moment. You may get a correction high. I'm not saying you won't. But for me at the moment, it looks very vulnerable. And similar in here from the Nasdaq, not quite back down to Friday's lows. We did say got that pop higher going into the close on Friday, but giving back a significant amount of that. You've got some obvious targets down here on the Nasdaq in the 11,580 to 11,530 kind of area. These swing lows from the middle of July. So those are potential downside targets. And again, looking at the 15-minute chart in here, again, you've had this little rim. It is holding these lows. If the Nasdaq can hold these lows, and I know the S&P is really the benchmark, but if the Nasdaq can hold these lows in here going into today on a next test, going into the cash open, you could see a rebound. If these lows go, then as I say, I think the real downside risk is to those July target lows down here in the mid 1100s, 11,500 kind of area, 11,600, 11,500 area. So real downside threats there. Given the time, I'm just going to quickly just have a look at the commodity markets. So oil remains vulnerable. Sideways on Friday, down significantly, and got the lows in here from a week or so ago in sight. So back down to maybe $81, looking very vulnerable in here, oil to the downside. and you can see, falling in free fall in here at the moment through this morning. Looks really risky to the downside for oil, back down to 81 and maybe below. And if we take a look at, actually, just go quickly to the dollar. So the dollar, you can see, holding on to gains in had a strong gain post the CPI data, held on to those gains since then and pushing higher in here this morning. And with that's being assisted in here by, here's the US 10-year note, US 10-year note pushing lower in here, breaking down through Friday's lows. If we actually go and look at the yield in here, so let me just pop this one out, switch it here and make it a bit bigger. I think we're through. Yeah, we've been through the yield high. Where are we? Where's the pop out? It's usually up here. No, but we've popped above that peak in here, the previous peak in here. And that's not the one I want. Here we go. This is the one I want. So yeah, we just popped above the peak in here. So the peak was, I think, 350, pretty much bang on. Where are we there? High, yeah, 350, and we've popped above that in here this morning. We're right on that at the moment. So US 10-year note making new multi-year highs in here this morning, and that's obviously going to put negative pressures. But the Nasdaq actually holding in relatively well. And if we go take a look, obviously that's going to, that's helping the dollar back higher in here. And if we go and take a look at gold negative, on the back of that, even though we had a little pop back higher on Friday, gold negative with the dollar strength. And we go to 30-minute gold. You can see gold in here sold off over through this morning, had a little rebound and selling off again. So gold looking vulnerable. So we're definitely in risk off mode still. It's all about whether I think the Nasdaq can hold those lows. If the Nasdaq can't hold the low from Friday, then it looks super vulnerable. Risk off scenario. S&P's already through that low. Gold looks negative. Dollar looks strong, and US yields looking to push higher, and the oil looking to push lower as well. I'm going to wrap it all that up there, guys. Rushing back to a funeral, never great, but nevertheless, it's all quite interesting. I will not be with you tomorrow. James will be with you tomorrow, so tune in to see James tomorrow, and I'll be back with you on Wednesday. Until then, have a great trading day. Stay safe, and have a good one. Take care.